Welcome to TradeTheMBI.com. This is John. This report is for the 28th of April. And no, I haven't freaked out. What you're looking at here is a chart going back to 2017. And this is the PNT2A pink bar. But we had an orange candle back then, well, roughly at the 2400 level. And then you had this massive increase that just continued to go unabated for quite some time. And the key to this kind of setup is, looks great and all, but as I pointed out before, the market can drop very fast, very quickly. 2/3 of that gain that took, all those months wiped out in literally 3 days. And it's relevant to where we're at now, because when we move to, the current chart, you're looking at a situation that could just as easily repeat itself. So we fast forward to the current chart, and coming off this buy signal back here on the crossover, we've had a nice run, but what you're seeing is higher highs. Right now, it's slightly lower from an NBI standpoint as well as from a shakeout standpoint, and higher highs on lower shakeout as well as potentially lower pivot of yellow magenta can produce the exact same results. So it's just worth noting so that you never forget that there is that potential. And you may get a warning of a couple of days, but potentially no, that can happen as well. Often you'll get a blow off to the top before it happens, but not always. So, but as we are now, magenta is over. Hey, it's all good. Where you start to see potential weaknesses when you get over this 9 level here with the white, and any fade in the blue, particularly when it crosses below the green, you're going to have an issue sustaining any move to the upside. So, worth noting. But for now, not at the forefront of anyone's thought, because everyone's just talking about the exuberance. And a lot of this is, again, the devaluation of the dollar is forcing the market to go higher, despite the liquidity and everything else that you think of. In fact, you're already seeing reports from various investment banks and that talking about how the yield potential for the S&P and that going forward is difficult, given where the value is relative to earnings in that, because you really can't put your money anywhere else. So the market forced everybody to have their money there, but the slightest change in inflationary pressure and or interest rate rise, and that all changes in an instant. Speaking of which, we have FOMC today, so that will be interesting in the guidance. It should make for a raucous event. Certainly here you have the NQ a lot weaker in general, though with the white dipping back down a little bit better there, but much closer to a magenta crossing back over, as well as you already have red almost moving below the blue, which again, soft when you see that setup taking place. Gold also expressing a little bit of weakness. Again, there were crude oil builds in that, so if you're not going to have inflation from that, gold is always looking for a reason that people would need to be out of it. Plus, on the flip side of that, you have the cryptocurrency, where a lot of people are trying to use that as an alternative because it's a bit more liquid in their mind comparative to gold. At least you don't have to pay for storage and everything else. From a euro standpoint, there's that devaluation. You can see it. It's not because the eurozone is growing, because certainly it's doing nothing. Though there's excitement in places like Italy and that here, where we just changed zones again, these colored things where you can and can't do things. We moved to yellow, which allows us to actually have restaurants where you can eat outside, not indoors. And then supposedly in a month, that's going to change. But the vaccine rollouts and stuff here are much slower than have taken place in the US and other parts. So that's been a hindrance, so to speak, in some people's mind. Thought I'd throw in the Bitcoin right here. It had the spring off that extreme oversold, and that was with the spike of the steel all the way above plus 13.5, but without a reset. Now the reset did come on the retest low dip. You see how significant that is. You expect the quick pop, and in this case gapped all the way back down to the bottom to fill that dip rate. I'm not covering it with my little thing. The extreme histogram was magenta on this low, so that filled it back in properly, and then boom, you have the orange right below, and the crossover of the magenta as well as red above blue, the MBI reading, and everything went boom from there. Now you got some expressed weakness that just popped in. You had the crossover. Red was already moving below, though you've got red down at the 0 level. It's a potential that could elevate things back up. We're already seeing magenta crossing above, so that's a little bit of a positive, but good to see if we get steel obviously moving above the orange would be helpful, but you're going to need a turnaround. And you can see how oversold that's getting, even within just this tiny little drop. So, but that can remain in that way, as you saw for here, for quite some time. Just worth noting, from an intraday standpoint, kind of boring. We had the beginnings of the breakdown that took place right there, full DOC spread by the time we got right over here, and we just cascaded lower throughout most of that. And then, as I was pointing out, when we get this move here of the relative short signal within the box, where in this case you had the orange popped above steel, which is bearish, but it immediately crossed back below, and then you had steel climbing above, created a nice perfect orange dip with the green crossover on the DOC, as well as all the pivots upward. So I was talking about how, relatively speaking, this would be the buy from there even before the orange candle, and making some of the adjustments on the code there. But I mentioned that this was likely to fade back a bit, and that's exactly what it did, and then recreates the buy setup. So it was within a bullish move. This pop of this candle was just a little extreme for it to be all in one, and then we get a secondary anomaly where right at towards the end of the day, you get an orange candle. I'll put the exception in for that. Not really interested in taking buy with yellow MBI over 33. There isn't really anywhere else to go with that. So no, I don't want to be seeing that kind of buy setup taking place there. So I'll have that exclusion in for the update, and that would have kept things still bullish, but modestly bearish moving into that, because you would have expected that you're going to get a return back down to it. Sure enough, that's exactly what it did. Came all the way back down to the magenta and slightly lower. But we ended up with DOC orange underneath the red here on the pop, and that was enough to just create a bunch of chop at this particular stage. We've been this slow, and you're going to get chop in those ranges until you end up with these green peaks, and those become pivotal in being able to gauge the change of trend in that. Like for instance, this one right here, above 25 is what I usually look at as a threshold, and then I'm looking for the breakdown of magenta yellow. In this case, the yellow staying outside of the green. Not horrible, but it's going to stay in a decline mode until we get that magenta crossover, or if we dip a little bit further with the red here. We're right under 1, getting to that point. If you get into the negatives, then usually we know we're going to get a pop. But oftentimes you get the soft little, tiny little moves in between, and that will elevate it, and you don't get that extreme move lower. And from a DOC standpoint, you can see it's saying continuing to rise off that rejection that took place, and steel below the cyan as well on the crossover. That becomes a pivotal marker right there always when the steel crosses below cyan, and you have the orange spike above it, particularly when you have green crossing below. When they all happen together, is something we've always talked about. That's usually a good trigger, and you can see what it did. I mean, it was from a 5K standpoint, 1 bar made all the difference there. Let me slightly make an adjustment here. Chart was a little high for the recorder. And that's where we currently are. But I'll be making that adjustment, and you'll have a few others that are coming through on the PN22 that just gets us tighter and tighter to the action. It's really looking very nice and very easy to trade. As always, though, I will keep updating you on special circumstances as they pop up and report on any of the details. What I'm looking at, just so you're aware, instead of having programs for daily in that, because the dailies tend to react a little bit quicker off of the magenta yellow, I'm just going to create an input that will allow you to change the guidelines. So you'll have an input that will be a daily chart, and you can just push 1 for that, and that will give you the readings for a daily chart, and then another one for like 50K, 60-minute kind of range, and then of course the lower, which is fine for 5, 15-minute, even up to 30-minute. As always, though, trade well. Talk again later. Indicator renewals will be going out, so you'll have everything set for the beginning of the week. It should be exciting. Trade well.